Benny. Happy Saturday.
Same to you, mate. So we're back. We've been busy getting some loans through for some people,
Yes.
but we're back at it. And today we've got a really important conversation to have on the topic of refinancing. Now, this is very relevant today. Corey, how about you talk us through what Australia is facing in August 2023?
Yeah. So it's I think the stats are is 1 in 3 borrowers are looking to refinance, which is significant. 40% of the market, so hundreds of billions of dollars worth of loans are about to come off the fixed rate cliff. So a lot of people paying high 1s and early 2% the last, 3-4 years. And there are some people that are still, in the position till next year.
I got till September 24.
One of the lucky ones. However, the majority of the market is due to come off within the next couple of months, and that's already started. So we're starting to see a higher level of default. Still very low compared to other countries, but we are at a level of default now, halfway through the year, as we were for the entirety of the year last year. So we're finding that people are going to be having to spend significant amount of dollars for their primary house or investment property. Potentially you had an investment property that was nice yield and profitable, where now you might be at a neutral or negative position, or you might be in a position where you live in your house and you're going to find yourself having no surplus cash or negative position. So it's important to get an understanding on some numbers and how refinancing might be beneficial.
Now, for today's scenario, we want to introduce a new person, Richard and Barbara. They've got a single solitary investment property. They've gone out, they're renting wherever they are, and they've gone, we want to buy an investment property. Maybe they had their owner occupier and moved. Let's leave that to your imagination. But they're coming to a place where they're coming off their 2%. And they want to refinance, and so they want to know some of the figures. And that's generally the conversation we have, isn't it? People are going like, what can you get me? What can you do? What does this mean for me?
It's not even sometimes the interest rate. Sometimes what's the repayment? What's my repayment?
Yeah. So now, before we get into the figures of how much you're going to save, when it comes to refinancing, generally people don't always know that sometimes you can't refinance. Now, why in a situation would that happen?
Look, it could be that you're overcommitted, and look, it's not your fault. The RBA, they didn't hold a gun to your head, but they certainly encouraged borrowing, and said that we had till 2024 at the position we were in. So there's a lot of people that overcommitted, bought properties that might have been stretched of their actual budget, did high LVR borrowing potentially, and now they're in a position where loans are being assessed. There's a buffer rate. So let's say the interest rate's 7. The banks are putting on 2.5% buffer rates. They're assessing you at 10%. And in a lot of cases, people can't even, on a bank's perspective, even afford the loans they have. So it means you're in a position where you can't do anything. You weather the storm, sell, or come to somebody who knows that there's like a broker who knows where there are some lenders that have just recently brought this in where they're not doing the buffer rates.
Wow.
So that's unique. And we don't know how long banks are going to do that for. It's an APRA and ASIC regulation that there should be a buffer on the rate. So theoretically, every loan that gets submitted that is being assessed at a lower buffer is being reported to the regulator. So we don't know how long the banks are going to do this for. Or maybe they'll keep doing it till the regulators
get in trouble.
Yeah. So it's taking the opportunity now, not missing the boat potentially.
Now, the other thing is that people can, and we've run into this a few times, where people have got a loan because they had, both of them were on sweet jobs, but now there's a kid or a couple of kids, or the job's changed or those kinds of things. And some people When you were at 2.5% interest rate, they were assessing you 3%. So at 5.5%,
Yeah.
now you're at 6%, and you can't, afford it. And so there are some people who are really stuck. And what would you say to someone who's in that situation?
Yeah, look, I'd definitely empathise with them. Everyone's feeling a little bit of a pinch. What I would say to them is it's time to start talking to somebody that can help you, and whether that's organising hardship. One thing I found with financial institutions, they're not very interested in taking your property and taking your assets. Don't stick your head in the sand. Talk to a professional, whether that's a broker or talk to the bank, because it's best to get in front of it and not stick your head in the sand and not just wait to see what happens. Better to take action.
Yeah.
And I would also say perhaps it's time to get a job or another job or a second job, or to potentially reduce your lifestyle or sell and downsize.
Yeah, and that's a really valid thing at the moment. I mean, if you were to sell and downsize at this point, you're probably going to get into a fairly cheap home because properties have dipped a little bit in some areas. You might be able to get some equity and some growth over the next couple of years when things start going up. But for the sake of this scenario, we're not going to get too focused on serviceability. And obviously we can help. And if you're struggling there, please call us. But we want to focus on the reasons too, and reasons not to refinance. Now, we want to talk about Richard and Barbara. They're refinancing as an investment. And this is super common. We have a lot of investors come to us and go, we'd love to refinance. But especially in today's environment, the average loan size is $550K. And so all our figures will be based on that. But if you were one of the ones who fixed back in the day at something like 2%, your $550K loan is $2,198 a month on a $550,000 loan.
Yeah,
There's only 507 a week. For a lot of people, that's probably a positively geared property, or
less than rent. It's less than rent, that's for sure.
But if you were to come off to 6%, you're looking at $3,297 a month, or $761 a week.
Significant.
That's a massive difference. That's $1,100 a month you've got to find now.
Significant. If you were someone that was living on the line at that level, what's another $1,000 going to do?
Yeah, but as an investor, you there's no way you're putting your rent up that much.
No, there's no way. And you'd lose a tenant, right? Yeah. Now, look, the benefit at the moment is the rental market is vast and big, and there's a lot of people looking for property. So, but you're not going to have your mortgage covered. No. More than likely, you at a good yield, high yield area, right? And you need to be very strategic on how you're doing that, and maybe that's a property professional helping and locating those areas. But likely, you're not going to be cash flow positive in this market.
Yeah,
you might buy in or refinance and have yourself slightly negative or neutral. So it's significant. You're not going to be able to increase your rent by $250 a week.
Yeah,
cover that difference.
Yeah,
you're not going to be able to.
Yeah. So the reality is a lot of people are in a spot where they're going, 6% is the figure I just quoted before. Let's be honest, most investors are probably coming off their fixed into high sixes, really, even low sevens.
Yeah, it's true.
And so this is where refinancing in the arsenal of an investor is very important. But this is also where refinancing for an investor gets nuanced, because many investors aren't going, I just want to get a cheaper rate. Most of them are going, I want to get another property.
It's true.
So they don't just want to know the interest rate they can get. They want to know what equity they can get for a reno or for another investment or build a granny flat. And here's the thing for us, we're going to cover this in the next couple of weeks. We're going to talk in depth on that, but we can get those answers for people. If you're out there and you're in a scenario and you're wanting to get a refinance and a cash out, we can get answers for that. Just give us a call. We'd love to
Yeah,
help.
and selling's not always going to be the option. I think I think as of 2 weeks ago, the stat of what's on the market, 75% of what's on the market is all landlords, so investors
Wow.
selling their property. I don't think it's, if you can weather the storm, have a slight loss or neutral, you're going to be far better off to actually accumulate another property potentially,
Yeah.
and put your property on the market and sell for the same price you potentially bought it for. And not because it's not valued at a higher amount, but just simply what the market is, the inflated piece of the market is doing. If you've got a $500,000 investment property in Queensland, WA, all these high growth areas, you're going to get rid of it, the stock, you're going to be selling a little bit below where you probably could get. Yeah.
So one of the key ways to hold on is to refinance.
Correct.
And so let me just share my screen and let's just talk through some figures of what this means for an investor. So here you've got the interest rate as 2%, monthly repayment. This is P&I we're talking here, 2,198. It's basically 2,200, 507 a week. You go to 6%. That's $1,100 more. You go to 6.5%. I can only imagine what 7% is going to look like, but that's close to $1,400 extra you got to find a month. And so if you're coming off into a high sixes or a 7 scenario, we do have there are interest rates around that low 6 mark that we can refinance you to. And so if we were able to take you from 6.5 to 6, you've got here, we can save you $179 a month based on this rudimentary kind of very base level figures. Now, what does that look like? What's the process for that, Corey, for someone? And what do you think that means to an investor?
Look, what it means to an investor is, you're closer to not putting in money from your paycheck week to week, right? You're closer to having more of the rent cover the cost, right? It may not cover the cost, but I tell you what, $200 a month is significant over 5 years. And what the process is really looking at your position and financial position to see if you can do that. The offerings out there on the 1% buffer, that they'll want you to be on P&I because of the risk of the loan. It's too high a risk to go interest only. So, yes, you'll be on P&I, and on a tax level might not be recommendable, but it's better to lose out on some tax opportunity rather than be defaulting your loan and living on the poverty line.
Mm-hmm. Now, you mentioned interest only there, and I've got this listed here. How about you talk us through what this means? It's the same interest rate as 6.5, but we're seeing it's a lower monthly repayment than the 6%.
Yeah. So with the benefit here, right? In the case of Richard and Barb's, they don't have another property, so for them it's simply benefiting the max amount on the rental income, paying for the property, and having extra cash flow for themselves personally. That's the fundamental piece of it, of what it is. If you're a person out there and has an owner occupier property and an investment property, it's literally the opportunity for you to not pay down the investment, maximize deductibility, caveat tax advice required, and putting your primary extra principal payment you would normally pay to your investment and put it to your mortgage, because that's a beneficial debt. That's what it means fundamentally for those two different parties.
Yeah. And so the reality is, a refinance in the hands of an investor is a very powerful tool in this season.
It is, and even potentially to create wealth. For example, if Barb's and Richard had another $100,000 in cash, refinancing it for borrowing capacity to a lender that has the 1% buffer and applying for the pre-approval could buying the property at the same time means the borrowing capacity could be better for that purchase if you're doing it exactly at the same time. That's not a simple process to get the timing right of that, but that's what it could mean, and it could be a wealth building tool to refinance as well in terms of recycling the funds.
Well, you can see here. I mean, that's 318 versus the 6%. That's how much you're saving, but versus 6.5%. If you were to go to interest only, that's close to, not far off, $500 a month.
Yeah,
that you don't have to find. So I stopped sharing that, but just to give you basically an idea. So now you'd only go through, like you've said, if you've done your research, that you've talked to good financial advisors to make sure this is the right strategy for you. But if there's massive savings, there's hard-earned cash you don't have to put in right now. And as an investor, cash is king, especially. So
yeah.
Look, is there anything you want to say as we finish this up to anyone out there in this situation?
Look, I think don't sit on your hands.
Mm.
Take action, right? You might miss out.
Yeah.
We've had two. I don't think we're going to have more interest rate rises, but because
he's gone there.
People have said that. People have said that. We haven't had in the last 2 years. We haven't had more than a couple of times the rates haven't gone up, and it wasn't consecutive. But we don't know what can happen. We don't know what will happen. We don't know what's going to happen around employment. You know, it could be further unemployment. Geez, I don't want to be paying that. If I can save money now in case I don't have a job, then not saying come to us if you know you're losing your job, but you don't know what the future holds.
Yeah.
Just don't sit tight and don't miss the boat, because you'll pay for it later. It's a conversation, guys. That's all it is. We're very quick to tell you yes, no, and yes, maybe. You know, we're very quick to do that. And you know, we're here to help you. We don't work for the bank. We work for you. We have your best interest here.
By law, we have your best interest.
By law, we have your best interest. We have to demonstrate that as well. We have to document how we've had your best interest at heart, and it's our duty to do so. Don't wait. Don't sit tight. Take action, because you'll be one of the people that miss out, and you'll be one of the people that are hurting. But what I am going to say is, even if you refinance, it's not roses. It's an opportunity for you to rehabilitate yourself to weather the storm.
Yeah, absolutely. Well, mate, thanks so much for your wisdom, and I hope this has helped someone out there. If you want more information, hit wherever you're watching this, hit up the top, hit our name, DM us, send us an email, go to our website. We'd love to chat with you. We'd love to help in any way that we can. And apart from that, we'll see you next week. We're going to be talking more refinancing, talking more stuff there, which is going to be absolutely fantastic. So we'll chat to you soon. Have a great week.
Thanks, guys.